Good morning, everyone. This is Curtis Hawks with Insurance Agency Marketing Services. I want to thank you for taking some time to be on the call with us today for a very important topic, which is the impact of taxation as well as legislative risk when we talk about how we help our clients save for retirement and ultimately how they take income out in retirement. So before we get into that, I did want to take a couple of minutes here and chat about some of the additional ways that we can help you with your practice. First up is our new producer builders. And as you can see here, we've got a number of different items on the screen here. And this is really a way for us to, if you haven't worked with IAMS before, it's really a way for us to meet you where you're at and provide some options to help you get to where you want to be. And so as a new producer with us, as you can see, we've got different tier levels there. As you're producing business with us, you can access additional ways to market, go on trips, cash, marketing dollars, you name it. And so if you have questions about that program, certainly feel free to reach out to one of our sales directors. They can answer any questions you might have on that. The other thing I would mention to you as well is if you've got some things that you're doing from a marketing standpoint that are working well for you, reach out and talk to a sales director as well. One of the core themes that you're going to find about us is we really do have a core focus on customizing what we do with the individual advisor and agent. In addition to that, we've got our referred producer program for those of you that are working with us that like the work that we do. If you happen to come across somebody or you have a colleague that says maybe they're not quite happy with their current IMO relationship or looking to make a change, you send them our way. Not only will you get a $50 bonus when that agent gets contracted with us, you'll get an additional $100 bonus when they write their first piece of business, and then on a quarterly basis, you'll continue to get bonuses based off of their production. And these are some of the biggest checks that we cut. And the nice thing about it for you is we take care of all the service, we support the agent, we do all those things. You don't have to do anything. These are just additional bonus dollars that you get. In addition to that, we've got our marketing reimbursement program. And this covers annuity, indexed annuity, single premium life, as well as traditional life target. And so you can see there, for every $100,000 of FIA premium, you get an additional $100 into your marketing account. And then you get an additional $200 for every 100,000 of SPL or 10,000 of target. And so this is a great way to double the size of your advertising budget. And that's been one of the things that I think we've seen here over the last year is it's not just about being more tactical with your marketing, but depending on what's going on in your local marketplace, you might have to invest some more money into your advertising to consistently get in front of that right target market. In addition to that, our back office support. And back office support is one of those things where everybody talks about it and says they do an amazing job. And me personally, I think we do one of the best jobs out there. But I do feel like with COVID, it really has highlighted the importance of a good team of people around you. As carriers have had staff go remote, and as maybe some of you have seen slowdowns with the processing of your business, having the right team of people at your IMO, whether it's case design, licensing, statusing cases, and getting things pushed through, it really does make an impact having the right team. And so I would encourage you, if you haven't tried us out, if you haven't done a piece of business with us yet, I would encourage you to do so, because I think what you'll find is that we do a very, very good job. E-applications. A lot of advisors primarily did paper applications, and as we've seen with transitioning to more of a virtual sales platform, e-applications have been a very important component of that. And so I did want to make a point that we do integrate with Firelight on our website. As a licensed agent, you get access to that. And they integrate with pretty much every major annuity company out there. And what you'll find is it makes the process very, very seamless. Wanted to put up here, you can see the carriers they work with. You can also see that we're constantly working on adding additional carriers. And again, the nice thing about that is we've got that right on our website. So you can go there and in one spot, if it's annuity applications, or we also integrate with iPipeline as well. So if you're wanting to do a life e-application, you can do that via iPipeline as well on our site. Creative marketing solutions. And I think creative really is the key. one of the things that we found over the last year is that many advisors were doing kind of a core set of marketing activities pre-pandemic, and there's a number of things that didn't quite work the same way or didn't work at all. As an example, going into the pandemic, workshops being one of those things. And so one of the things that we found over the course of the last year is we've had to get a lot more tactical and creative with how we're getting in front of that market because people still need our help. Consumers are still retiring. In fact, if anything, and I was seeing some recent statistics the other day, but the pandemic has caused almost a 60 over just over a 60% increase in interest on life insurance alone. And so one of the things that we've implemented, and I'm gonna launch this poll real quick, but we've launched our custom marketing analysis process, and what that is because we know throughout the country, there's different levels of openness as far as being able to transact business. We've developed a custom marketing analysis process. And essentially what we do is we'll sit down with you, go through what are your marketing assets, what is your target demographic, what is the geographic region that you want to work in, what are your goals, and then our creative team will put together a custom marketing plan for you that addresses in your local area what are the things and items that we think would be impactful and make a difference. And so it's a complimentary process. I would encourage you, if you haven't gone through and done this with us, you should. And right now is a perfect time to do it. We just closed out the first quarter. We've got the second quarter coming on board. And I'm going to talk about this here in a minute, but I think this could be one of the biggest quarters that we've ever seen as far as the ability to do business, and especially in the life insurance space. So I'm going to go ahead and close that down here. And again, we've got an entire team of people here available to help support your business from a marketing standpoint. Next up, I wanted to talk about the IAMS website. And again, we've gone through significant links to make sure that you have all the tools and resources available on there and kind of as a one-stop shop. So whether it's running life quotes, annuity quotes, getting paper forms, getting rates, all of that's available. The ability to do e-applications on both the life and the annuity side is available on there. And then I've got to mention our sales resource library. We literally have hundreds of different point of sale pieces that you can use virtually or live with consumers. And it covers every type of topic that you could think of, whether on one end of the spectrum, you wanted something that just talked about life insurance basics. What are the different types of life insurance? Or somebody that says, what is an IRA or a 401k? All the way to the other end of the spectrum. And you've got somebody that you're talking to about loan regime or economic benefit split dollar and everything in between. So I would encourage you to, as a licensed agent, you have access to it. But if you haven't checked it out, you need to, because there's just at your fingertips, any type of concept idea that you want to talk about, we've got a piece on it. In addition to that, I wanted to mention Retirement Analyzer. Again, the number one fear for retirees is outliving their income in retirement. And this software platform does a very effective job of articulating whether somebody's on pace or not and what needs to happen to change that. And today we're going to be talking about some additional software solutions that we have available. But if you haven't accessed Retirement Analyzer, reach out, talk to one of our sales directors. They can chat with you about how we'll actually pay for that for you. IAMS Wealth Management, few years ago, we set up an RIA platform, and we've really just seen some phenomenal growth with it. Charles and his team do an amazing job, and I would tell you, if this is something that you've been thinking about and adding this to the mix of services that you provide, there's never been a better time than right now. Or maybe you're an IAR and you're not quite happy with your current relationship. I would encourage you to reach out, talk to Charles and his team. They do an amazing job. They've got a high level of service, and this is a really great time right now to be adding that into the mix. Last, I wanted to talk about our Top Producer Summit. We announced this at the beginning of the year, and we're very excited about it. A core element of who we are is being able to get that face-to-face time with our advisors. And last year was a challenge because we had to push off and cancel the majority of our live events. So we were really excited to get this set up. This is going to be in the fall of next year. You can see end of August through September, but it's going to be a Mediterranean cruise. And we are going all out on it. We really want this to be an experience of a lifetime. Everything's all concierge level, and you can see that we'll be traveling through the Mediterranean, going through around the boot of Italy. We've got a number of good spots that we're going to be stopping in. And the other thing that we did was the qualification period runs through June 30th of next year. So we wanted to make sure that everybody had ample time to be able to qualify for it. And so I would encourage you, if you've got interest in that, to reach out, talk to your sales director. They can chat with you about it and answer any questions that you have and get you some additional information. So with that, we'll go ahead and we'll get into the main event of today, and that is talking about Stonewood Financial and talking about the impact of taxation and retirement. And with us today, I've got Tyler Randall with Stonewood. And I'd mentioned I think second quarter is an important quarter, and there's a few different things going on right now that I think really create one of the biggest opportunities in the Index Universal Life space that we've seen. So you had the Consolidated Appropriations Act that passed December 27th of last year. And within that COVID relief bill, one snippet of legislation that was in there was a modification to Section 7702. And for those of you that aren't familiar with Section 7702, that discusses how much money that you can put into a life insurance policy without it becoming a modified endowment contract. And so the net effect of the change was essentially you can put almost twice as much money into life insurance as you could before and preserve that tax-free status of the money coming out. That in and of itself is a huge deal because that hasn't changed in over 30 years. But then you partner that with, we've got a new administration that's coming in, and the proposed tax plan that's coming in is a round of tax increases. And so, as many of you are seeing in the news right now, there's infrastructure on the docket to the tune of a couple $1 trillion, and married to that are going to be tax increases. And so, that's a big question, I think, for a lot of the consumer base out there is what is the impact of taxes on my retirement? And I think there's also a common misconception, and what you see out there is, well, if you're making more than 400,000, yeah, you're going to see a tax rate increase, but if you're making less than that, don't worry about it. Well, that's not necessarily the case, because you've got tax rate increases and then you've got tax revenue increases. And politicians are smart enough to know that you can't go out and say, hey, we're going to increase tax revenue for the middle class. We're going to focus on the top 1%. Well, there's a variety of different ways, and I commonly refer to this as stealth tax, but there's a variety of different ways that you can modify certain elements of the tax code to increase tax revenue without technically doing a tax rate increase. And so I think all that points to there's never been a better time than now to be talking about the impact of saving in a tax-free asset class for somebody's retirement. So with that, Tyler, I'm going to hand it over to you. One of the questions I know a lot of people have right now is, and you and your team deal with this all day long, but from your perspective, kind of what's your guys' viewpoint on what we're seeing out there in the media and with this new legislation and all of that?
Yeah, great. I appreciate it. Thank you for having us. And I just want to make sure you can hear me okay and see my screen okay. It's all looks as it should.
All looks good. Yep,
Okay,
absolutely.
terrific. Yeah, I would agree with you. I think there's probably never been a better time where people are more tuned into taxes and are looking for answers. They're looking for people to give them some guidance. And being on this call, I think, you've got an opportunity over the next, certainly right away, but at least over the next 5 years to really get in and have these conversations around how we can mitigate some of the tax risk out there. And they are going to be pulling all kinds of levers in Washington to make sure that they can own more and more of qualified accounts and to have a tax-free allocation and to be able to share people with, the strategies that we're going to discuss here today. You really can differentiate your business, really differentiate you and your marketplace. And I think the advisors that do take advantage and the agents that take advantage of these conversations now are going to be able to leap and bounds ahead of their competition in their marketplace and do a tremendous service to the community, as well as drive a lot of new revenue to a business. And so I think I agree with you. The Secure Act was the start, complete money grab there where we're changing stretch IRAs to 10-year pays. The rules on these distribution vehicles, these deferred vehicles, could change at any time. It's up for vote every couple of years as we see new people be elected as our leaders, and we can see tax rates. They're already talking about increases and how to do it, and if and when they can drive more revenue to pay down all this debt, it's going to happen. And I think we've got to be talking about tax-free options and tax diversification strategies, and that's really what we're here to do today. So I'm just going to take you through, a little bit about Stonewood and what resources are available to you, what strategies and reports. What we've done is we're a company that's a sales, marketing, and consulting company that's designed to help you engage clients from a marketing effort and a point of sale effort in this tax-free allocation, tax diversification conversation, and take what could be a complex sale in life insurance and make it simple. And so we've built up books and webinars and client-facing material to help you with the endeavor of marketing, to get somebody's ear in a conversation. And then when you do have somebody that does say, yes, I'd like to meet with you, then we've created a software program that makes the point of sale presentation very easy, very clear and concise, and the value proposition is easy for people to understand. And we know if we can eliminate the confusion in a presentation and they can trust it, people will implement it. And if we can't do that, then people are going to if they have questions at all, they're not going to implement the strategy we talk about. And so I'm just going to take you through what's been working for our advisors and agents over the last several years to help them get to record sales in the IUL space, help them bring on new clients, and do it effectively. And so Stonewood really has built two marketing programs that are going to be available to you. And our first one that I want to talk about is called The New Rules of Retirement Savings. And this is a book. You're looking at the cover of a book on the topic. It's about 100 pages. And it's designed to engage your active savers, 25 to 60-year-olds that are saving for retirement with non-qualified money. And if you think about it, the old rules would tell us, save in a tax-deferred vehicle, defer all your assets out until you're in a lower tax bracket in retirement, then start taking your income and you'll have a big benefit. Well, I don't know how many people on this call feel like they're going to be in a lower tax bracket in retirement, but it's just not happening for a lot of Americans. They're in a higher tax bracket. They could be in a much, much higher tax bracket when they retire than they are today. And so the new rules would tell us, let's save in a tax-free vehicle so that we can eliminate or mitigate some of the tax risk that looms out there. And so this book, 100 pages, what we found is if somebody will invest the time in reading it, it will really shorten the sales cycle for you as an agent or advisor, because they're going to come to you with buying questions. They're going to say, how do I implement this? Show me my tax savings. And we have tools and resources available to you just to do that. The other book that we authored and we built a marketing program around is called the No Compromise Retirement Plan. And this is really designed to engage your 60-year-old plus. They've already accumulated assets in a qualified account. And now we're talking to them about when we pay the taxes on it. Do we keep deferring hundreds of thousands or millions of dollars 20 or 30 years into the future where taxes could be much, much higher? Or does it make sense? Can we help these folks save millions of dollars, hundreds of thousands of dollars in taxes, what we call macro tax planning? Most people do micro tax planning, which is 2020 taxes. How do I reduce them from last year? We're doing macro tax planning, which says over the next 30 years, how can I help you save hundreds of thousands or millions of dollars in taxes over your retirement years? And that's a differentiator conversation. We're talking to them about taking dollars out of your IRA over the next 5 or 7 years, paying the taxes now while taxes are low historically, and they're in pretty much a known quantity, at least for the time being, and fund a tax-free vehicle so that we can get this partner, this IRS partner that's a partner in your IRA right now. They may be a 25% partner currently, and they may be having their eyes on being a 40% or 50% partner in all of your qualified money in the future. We're just trying to mitigate some of that, get some of those dollars out of the qualified account where it's deferred and taxes could change, or that partnership ownership, if you want to think about it like that, from the IRS can change, and get it into a tax-free vehicle. And this is where a lot of our large case sizes are being done. I think our average case size here on the reallocation of IRA assets to IUL is about 50,000 in target premium. So case sizes are large, and it's very, very meaningful, as we'll see here in a minute, for clients to consider converting, or at least having this conversation will be a differentiator for you. So both books are available hard copy form for you to market with. They're also in an ebook form if you'd like to, send these books out. We've had a lot of success with folks giving the books away and saying, hey, this is a very powerful tax strategy. Could save you hundreds of thousands of dollars in taxes in retirement. Invest an hour in reading it, and then let's talk about it. We've had agents and advisors go from no IUL sales to hundreds of thousands of dollars in target premium just by marketing with the books. So they are very effective. Each book has a PowerPoint presentation and seminar with it. So complete with speaker notes. There's a sample video in our marketing catalog, so you can get real comfortable in presenting this idea and concepts of tax diversification and tax-free allocations into your business. The books can be customized. We have a program to do that. If you like them and you want to have your name on the front as a forward buy and your picture and bio on the back of the book, there's a program to do that. Lots of radio, TV, podcast content if you're marketing through that medium. There's show ideas for you. And a tremendous amount of client one-pagers and white papers and brochures and worksheets to make this presentation simple in a one-pager. Here's a tax benefits of a tax-free allocation on a one-pager if you want to do a drip marketing campaign. Here's the 5 benefits of tax-free investing. There's a number of brochures that you can use and have at your disposal. And then once somebody does say, yes, I'd like to talk to you, that's where our software comes in. We've created a very simplified tax analysis software that shows somebody, here's your tax savings. We can help you save $300,000 in taxes over your retirement years, or whatever the number is. You're able to customize that for a client or prospect, and it's very clear and concise, and people will understand it. We can also do income analysis reports showing what income would look like from a tax-free versus systematic withdrawal from a tax-deferred IRA or 401k, and compare and contrast those. And the income difference, especially total distribution over a lifetime, is typically very compelling from the tax-free source, especially if it's IUL, because of the death benefit that also kicks in on the legacy to the family. So there's a number of reports. I'm going to share a few with you here today. But not only do we provide all of the content and the marketing material and the software, we do a very comprehensive training around all of this. So if you're somebody that says, hey, I've been wanting to do more IUL in my business, I just haven't had a clear path or easy way to do it, that's what we're here for. We're here to be able to give that to you and also give you some training and support around how to implement this in your practice and drive a tremendous amount of new revenue and help your community and help your clients and prospects with this tax allocation and tax-free allocation, tax diversification strategies and conversations. I'm going to jump into the case studies here to show you some reports. Curtis, anything that you wanted to add here, or we good to kind of move forward?
So, one thing I'd mention to you as well is, and I know you're gonna show us a couple of platforms, but when we're talking about the retirement vehicles, you don't have to just compare to a 401k, correct? You can compare to a number of different types of savings vehicles, correct?
That's correct. In fact, this example of what we would consider a new rules of retirement savings candidate, which is a young saver, we're showing 401k here, but this could be 403b and quite often is. It's a funding vehicle, of course, for a lot of public employees and federal employees. And so any qualified account, this conversation works with.
Well, and that's I think an area where we've seen a lot of success with it. In fact, I would tell anybody, if you're using our virtual preset appointment program, we've had a lot of advisors that have had a significant amount of success working those appointments with this software platform and showing them. And as Tyler's going to show you here over the next couple of minutes, how, what's the impact of you doing what you've been doing, and what does that look like versus what if there was a better way to save? So yeah, Tyler, I'll let you take it over.
Yeah, sure. Yep. So this would be an example. I'm just going to share with you a tax report here in a minute, but I just want to set it up with the case study. This is John. He's he's 42, he's saving in a qualified account regularly, and we're just going to have a conversation about tax diversification. Does it make sense for this person who's 42 to continue to defer this money for the next 20 years until he retires, and then continue to just tap that untaxed account for income? Or would it be beneficial for him to take some of this money and redeploy it to a tax-free? And the way that we have this conversation is pretty simple. We just show the benefits of the tax-deferred savings vehicle. So from 42 to 65, the benefit of what he's doing in saving in this qualified account is that he will defer about $83,000 in taxes, which is terrific. You know, we defer that, but it's not avoiding the taxes. And this next number is what's always surprising to folks, which is from 65 throughout his retirement years, he will pay over $300,000 in taxes during his lifetime. And so we create this is what you're looking at now, is a 1 page of about an 8-page tax analysis that we would produce for, again, those active savers. Our marketplace is 25 to 65-year-olds saving for retirement. You can create a report like this very simply and easily. And the conversation is this: wouldn't it make sense, John, for us to fund a vehicle that would avoid that $300,000 in taxes altogether? And we can do that through a tax-free IUL versus just continuing to defer taxes. And in this way, you just defer $83,000 in taxes. But we have the ability to avoid that tax bill altogether, at least for a portion of this money. And this allows us to start that conversation around considering it. I think when people see this number, it makes a lot of sense. So the eyes are open, the ears are open, and now we have somebody's attention because we're able to help them avoid a very large tax bill and keep that money in their pocket instead of sending it to the IRS. And people are always into ways to not send money to the IRS. The next report that or case study I'm gonna take you through is, this would be under the marketing program, that no compromise retirement plan. So our clients and prospects 60 and older, they've already accumulated assets in an IRA. Jim here has 1.5 million. He's currently in the 25% effective rate, you know, combining local, state, and federal. And we're gonna have a similar conversation. Can we save Jim here hundreds of thousands, maybe millions of dollars in taxes by paying some taxes over the next 5 years, allocating, we're going to look at $500,000 of his $1.5 million, and each year over the next 5 years, take $100,000 out, 25,000 of which, since he's in the 25% effective rate, will go to the IRS, and 75,000 will fund a tax-free IUL. Let's find out if that's a benefit to Jim here. And so what we're going to look at, and this is just a 1-pager that we tend to use after we show one of these reports that I'll show you in a minute. We're going to talk about taxes first with Jim, and then we're going to look at the income consideration and the risk consideration in his portfolio, and if the reallocation of IRA dollars to a tax-free can help him save taxes, create additional income, and reduce risk. And so in order to do that, we get into our software and we create some return assumptions, and you can create whatever you feel comfortable representing. In this case, we've done a 6% stock growth rate, a 2.5% fixed rate on a 50-50 portfolio, blends out about a 4.25% rate of return. We also have to make some tax assumptions. And so we use effective rates, combining local, state, and federal. And for Jim, we're going to use a 25% effective rate right now. And we're also going to show that he's going to stay there for the next several years, but then we're going to see tax rates start to move up in year 7. And this is something that you can control when you want to show a tax rate increase, whether it's next year, 3 years from now, 5 years from now. We're forecasting this just as a assumption that taxes will probably move up, at least in 2025 when the current tax code sunset. Most Americans are going to see a tax rate increase that following year in year 6 and beyond. And so we're going to show a 32.5% tax rate. And then when Jim here dies, and we have him dying in this case study around life expectancy, age 90, most of the time the beneficiaries receiving this money are going to be in a higher tax rate. And so we're going to show this beneficiary at a 35% effective rate. So whether it's the spouse inheriting this money and going through the widow's penalty, you know, going from a single filer to, or a joint filer to a single filer, or if this money ultimately goes to the kids, and the kids are in their prime earning years in their 60s, and now they're getting initial 100 or $200,000 a year of inheritance, which drives them into a higher tax rate. More than likely, they'll be in a higher bracket. And so we're showing him currently in the 25% rate, year 7 going up to 32%, and then the beneficiaries at 35. We think it's a pretty conservative forecast. You could input into the software whatever you feel comfortable forecasting from a tax standpoint. So here's his allocation. He's got $1 million in AUM, $500,000 in annuity. And we're just going to say, you know, Jim, let's identify this third of your IRA to allocate to tax-free over the next 5 years and find out if that could be a tax savings for you. And so the way our report is structured is it's 2 columns. One is, here's what your tax bill will look like, Jim, if you keep your IRA, take your mandated RMDs at 72 and die with this account at age 90. Here's what your tax bill will look like if we convert it to a tax-free Roth or IUL over the next 5 years. So from the IRA, just from RMDs from 72 to 90, Jim's going to pay almost $250,000 in taxes on a $500,000 account. And that number may be surprising to him because most of the time when we're sharing this with a client or prospect, they've never seen an aggregate number. They get an idea of what an RMD would be, but they have no idea that it could be this much over their lifetime. And if he's like a lot of folks that say, hey, I don't really need this RMD, can you reinvest it for me, Mr. or Mrs. Advisor? The IRS is going to tax that as well if it's in a non-qualified vehicle. And so we're going to account for it in our software. The IRS will take about $65,000 of taxes. And then when he dies, the taxes paid on the remaining account value of death is about $143,000. So total tax bill that he's on path to pay over his retirement years is about $420,000 on a $500,000 account. And that's an eye opener. It's like the cold bucket of water over your head. And most people see that and they say, wow, I had no idea I'm going to pay that amount of taxes on this amount of money. And this is where we can step in and have this conversation around. Here's how we can mitigate some of this risk. If we take $100,000 a year, while you're in the historically low rate of 25% and get it into a tax-free, we could minimize your taxes down to $125,000. And of course, once we have it allocated to a tax-free, there's no taxes on growth, no taxes at death. And so the total tax bill is $125,000. So what you're looking at now is a 1-page of our 8-page tax burden report that simply shows here's the path that you're on, and you're probably going to pay around $420,000 in taxes. And here's how we could mitigate that taxes down to $125,000. Tax savings is about $300,000 for Jim here. And when people see this, they are all ears. And again, we're not talking about, reallocating his entire portfolio. We're just tax diversifying a portion of his IRA. And this is where this type of planning is where we're doing all of our large cases. And it's really where a lot of folks are tuned in. And if it's a prospect, if Jim's a prospect, it could really be meaningful. So we could bring over his IRA and his annuities and his AUM. You could get the whole enchilada because we're talking about such a different conversation than people are having out there. Everybody's talking about mitigating market risk and income allocations, but not a lot of people are talking about trying to mitigate tax risk as an, almost like a new asset class. So this you might notice we're talking about converting to a Roth. We do that for compliance reasons, and we like to tell people, hey, everybody can get approved for a Roth. Our preferred tax-free option is IUL, but we have to qualify for it. There's a number of reasons we like it: for the death benefit that makes us whole on the taxes that we're going to pay, the living benefits you're going to need in your 80s that you probably don't want to pay for right now, and you certainly probably won't qualify for in your 80s, and also the market protection that we'll share with you here in a second. So we hit all those points and pivot to IUL pretty easily. But if IUL is not appropriate and you want to go someplace else, annuities or AUM or whatever is the appropriate vehicle, it allows you the flexibility to do that. So going back to our worksheet, talking about taxes saved, the difference between the path that they're on and the tax path we can help them get to is about a $294,000 tax savings. So that's terrific. The next thing we want to consider is the income that Jim here can get. And so we have 2 separate reports, and what I'm sharing with you is kind of a side-by-side of the data that we could present. But what we show first is what the income could look like out of the qualified $500,000. If he keeps his account, lets it defer out till from age 60 to age 70, the value of the account growing at 4.25% rate of return would grow to $617,000. Of course, you guys We'll be able to control in the software what rate of return you feel comfortable with and what future tax forecast you want to show. But we're keeping this the same just for this case study as we just set up in the last data points that we talked through. The income that we would take from the 617,000 at age 70, we're not showing a reasonable withdrawal rate or 4% here. We're going to show in our software the maximum you could take out of this account so that your money would last till age 100. And so the maximum you could pull is 33,000 a year. And once we take that income, we've got to pay taxes on it. And so our net in pocket is about $22,000 a year. So we just shared this with a client that you're going to take $22,000 out a year. The net total distribution over your lifetime is about $673,000. So the whole idea here is to give a client or prospect a snapshot of, if you keep doing what you're doing, status quo, here's about the income you can put into your pocket, or you could expect to put in your pocket over your retirement years from 70 to 100. On the IUL side, we took 375,000, which is the after tax, since we converted this $500,000 to the IUL. 125,000 again went to the IRS to pay the taxes. $75,000 a year went into a 5-pay into this IUL. And you can use whatever carrier you'd like to use. We're carrier agnostic. You can run the credit rates at whatever credit rate you want to use. We use the max credit rate for this particular carrier. And the 375,000 grew to 466,000 from age 60 to 70. The income, according to the illustration, using participating loans here, was about $35,000. And of course, that is tax-free. So total distributions from 70 to 100, including the death benefit, was 1.2 million, almost double the total distribution from the IRA. And so we always get, when we compare these, well, you're comparing a lower credit rate on the IRA. Why? That's not a fair illustration. Well, you can run these, by the way, any way you want from return numbers and run your IUL any way you want. But here is something to consider. If you are in an unprotected qualified account in the left, and you are talking to a 70-year-old and going to allocate their portfolio from 70 to 100, what's the realistic equity exposure that you're going to give or provide to this client? Is it 50-50? Is it less? Is it 40-60? Is it 30% equity? Especially when they get in their 80s and 100s. And I think if you start to consider that the only way to mitigate the risk on an unprotected account is to asset allocate the risk away, that 4.25 may be aggressive, right? Especially the return numbers they're going to get from 80 to 100. On the IUL side, we don't have to worry about asset allocation. The insurance, we've insured the risk away through the indexing. And what that allows us to do is get maximum equity exposure to a cap. And if we look at the last 20 years of the market, we've averaged about 6%, actually a little bit more on the IUL side. So do we feel comfortable representing it like this? Yes, we do. Do you have to present it like this? No, you don't. But I think that, given what my comments, that at least it does make sense that you can either asset allocate the risk away in retirement, and your returns and equity exposure are probably going to be commensurate to a lower return than you could potentially get from a protected IUL with full equity exposure. And that's the way we present it. And you can certainly do it however you'd like. But tells a very compelling story. Oftentimes what we get from clients is they say, well, I see that $35,000 is the income. Why don't I just take that out of my IRA? And you certainly could do that. But in order to net $35,000, we'd have to pull $52,000 a year, which, as you know, looking at 617,000 is a kind of an unsustainable withdrawal rate. And we could do that. We just wouldn't be able to do it for very long. We're going to run out of money before we run out of life in a lot of cases. And that's an issue. And although our total distributions do go up over a short period, we're still almost $1 million less than we're going to get from the IUL. So reallocating this portfolio has done a couple things for us. We've reduced taxes, we've increased income and total legacy. And what you're looking at now is just the sample. You're actually looking at the one page of the reports that we would present. So if you look at that report on the right, instead of having 50 pages of carrier illustration where people fumble through all the pages and say, okay, look here, look there, and it's tough to make a presentation, we do one page that's very clear and concise. It's easy to understand the strategy that's being put in place. And the small print at the bottom is the carrier compliance. So you now have a compliant way to present an income comparison without having to use a whiteboard or yell legal and these long insurance carrier illustrations where, most of the time people don't know what the heck they're looking at with those things, and it's confusing. And again, like my opening comments, if it's confusing and they don't trust it, they won't implement it. If they can look at a one-page report and it's easy to understand, they trust it, they will implement it. And so again, just kind of capturing, this is kind of a sales 101. We tell them what we're trying to do from a strategy standpoint. We show them the broad concepts with the reports, and then we tell them again and tell them what we told them here with this one pager. So the difference between the income allocation on the qualified account and the IUL is about 579,000 of additional income we created from the tax-free, and $294,000 of tax-free savings from making the reallocation. So here's a very compelling story we're building. And then we talk about, one of the reasons we like IUL is the market protections. Here's the average return of an unprotected S&P 500 over the last 20 years is 6%, with a lot of volatility. And again, this is 100% allocation to the market. Here's the IUL investor, protected in every major market downturn. And we always remind people, there's a cool slide on our site that you can use that says, hey, remember last year in March when the unexpected happened and COVID hit, the market lost 26% in 2 weeks. If you were in an unprotected account, you just felt it. If you were an IUL investor and protected, nothing happened. In fact, you're protected in every major market downturn. And there's going to always be a COVID or a bubble burst in technology or a housing crisis. It's going to happen over the next 20 to 30 years, and nobody's going to be able to know when it's going to happen. And that's why we like IUL. So not only do we get the tax benefits, we get the income benefits, we get market protections, and even this is another chart we use in the worst case scenario. The IUL is performed when other vehicles haven't. There's just a lot of reasons that we like IUL versus an unprotected Roth. So these reports are all, these charts are all available to you in our marketing catalog, and you can have access to tell that powerful indexing story. Last thing I want to share with you is cost, because when we get objections typically around insurance, it's cost. It's too expensive. They Google insurance. Nobody makes a decision anymore without Google, and they find all these negative comments around insurance and its cost. So we have a software that you can plug in a carrier illustration, some data, and we just compute cost as a percentage form. And if we ask a client or prospect, okay, I hear you on cost compared to what, and they always answer in a percentage form. They'll answer, compared to my mutual funds, 1%. This is more expensive than that. Or my 401k is 2%. This has got to be more expensive than that. So once you use our cost software, we compute the average cost of insurance as a percentage form. And this is a one-page compliant report. So we've worked with the carriers to do a simplified cost presentation. All that small print is the carrier compliance. So you can say, you know what? We ran the cost analysis for this. The average cost of your contracts is going to be 1.3%. And that stacks up pretty well for all the things that we get. Because remember, we're getting almost a $300,000 tax savings. We're getting over over $500,000 of additional income. We're getting the market protection. All those things for 1.3% really is pretty reasonable. So there's a number of other reports. If you're doing legacy planning, we have simplified legacy reports. We've got a simplified IUL report that you'd love that takes a 50-page carrier illustration, boils it down to 1 or 2 pages that are compliant to present to a client, that are clear and concise. There's a number of things available through our software that just makes, again, what could be a complex presentation, try to make it simple and easy for clients and prospects to understand. And so that's really in connection with all the marketing that we're doing, the PowerPoints, the books, the client one-pagers. The software just tries to make your life easier when it comes to a point of sale presentation around insurance. So just kind of go through what it costs typically for membership is discounted for if you decide, yes, I'd like to license all of this through Stonewood. You get a discounted pricing through our relationship with IAMS. And what it gives you is not only access to everything, but we also provide an IUL master's training class as a resource to you. It's typically $600 if you're not a member of Stonewood. It's included in our licensing cost. It's a full day deep dive of sales positioning and marketing of IUL in your business, how people have successfully used us to incorporate these resources into their business. The live event's probably going to be in September. Until then, we're doing virtual events that are about 3 days for an hour and a half over lunch Eastern time. So you could tap into that. There's also an advanced class that we do, kind of a 201 version of that. We take you through a 5-step onboarding process. So if you become a Stonewood team member, you're assigned to a Stonewood premium member. You're assigned to a team member at Stonewood that'll take you through and show you how to customize the marketing material and how best practices on utilizing it and that sort of thing. And that's something that's an ongoing support for you. Lots of client appreciation events, PowerPoint presentations. I know we talked about legislative risk and tax risk and what's happening there. We have content on that. We have PowerPoints not only on both books, but also on that subject, as well as maybe a dozen other PowerPoints that you can use on micro and macro tax planning, all with speaker notes, sample videos, everything that you'd need to get comfortable in presenting it. It's a resource that's available to you. And there are, also is that program to customize the books if you want to market with those. Those have been very effective. And really what we're trying to do is help you find a guy like Jim here, 5-pay, 75,000 a year, about $40,000 in revenue to you. And that's a tremendous ROI for your business if you can find one. And most of the time, if we're really having this conversation, we're marketing with it, you might find one of these a month. So now we're talking about 300 or 400 grand of new revenue that's coming from this. And I can give you hundreds and hundreds of folks that have implemented this, that have gone from no IUL business to being very successful, plugging into our software and our training and everything that's available to you. And what's been really cool is if this is a prospect, if you're doing a seminar or webinar, and this is the story of tax diversification as a differentiator to your business, and this prospect comes on, you might bring the FIA business and the annuity business and the AUM business, and now it doesn't take a lot of these types of wins to really be meaningful to a practice. And so that's really what we're here to do. So just to kind of give you an idea, we have a license for our new rules of retirement savings that Curtis will tell you about, that IMSO, our partnership, will pick up the tab for you, give you access to all the active savers. So those folks saving in a 403B or qualified account, we're trying to show them a tax advantaged alternative, allocation of tax free. You get the seminars and the books and the client handouts for that, the reporting for those types of clients. And you can talk to Curtis more about that and IMS, and they can help you with that. A lot of our training and things are done virtually or consumed digitally for that. If you like the conversion planning, that's what we call our premium membership that falls under our no compromise marketing program. That's converting IRAS to IUL. So for an additional discounted cost, you can license the seminar and the client handouts and the books that go along with that type of planning, the reports around wealth transfer and reallocating IRA assets to IUL. And we also include all of our training, our IUL masters and our one-on-one coaching and a dedicated client relationship manager to you through that premium content. So you get everything that we offer through that premium membership. And if that's attractive to you, just let us know and we can help talk to you about how we can get you started with both. So be on the lookout for the invitation to attend one of our master's training classes. If you're a member, it's included. If you incorporate the basic license, you can attend it at a discounted cost, cheaper than $599 through IMS and our relationship here. We certainly do the onboarding and training again, and all the reports is really there for your use. So that's really what I had, kind of a finishing up statement here. Not only do we software and marketing and training reports, but we try to give you a very simplified system to implement IUL into your practice, and we've been able to do that successfully for a lot of agents and advisors. So I'll just turn it back over to you, Curtis, and see if there's any closing comments that you want to make.
Thank you, Tyler. I appreciate that. And hopefully, as all of you have seen over the course of the last 40 minutes or so, some of the same things that we've seen, which is this program really addresses the current climate, the current market right now, and I think helps position you to have a significant amount of success. So one of the things I'm going to do here is I'm going to launch our final poll here. And if you're interested in getting access to the software and the marketing program, I'll leave this up here for a minute. Um, but feel free to answer that. And the other thing I would add as well, and Tyler, I know you chatted about this, but we've had, as an example, just over the last couple of weeks, a significant amount of success with the election analysis module because there's so much in the media right now about the infrastructure bill and proposed tax increases and all of those types of things. And so it's really been a good piece that agents can use and get out to clients. And so I know you mentioned that you guys have a number of different topics, but I mean, it's wide ranging and you're constantly adding to the library of content that you have as well, correct?
Yeah, that's correct. I mean, if we have a relevant topic and we feel like it's meaningful to be able to get that message out to the general public, we'll build out the content and put it on our site. And so, the presidential election, all the changes that have happened, we've got content on the site so that you can be timely and relevant and have a presentation that you can make that really is top of mind to the general public. And so we try to keep that content fresh. There's all the content around the books is always there, but there's a ton of other PowerPoints and content that you can use that's around relevant topics and how we can help uh, clients and prospects in the current market that we're in.
Well, I appreciate that. And I appreciate you taking the time to be with us today. I also wanted to mention to everyone as well, we kicked off our IUL Advantage webinar series back in March. If you haven't had a chance to watch that, reach out to one of your sales directors. They can get you a recorded version. We do have the second presentation of that coming up on April 20th, so be on the lookout for some email invites on that as well. And again, I hope you see the opportunity here. It is just a perfect storm. Congress just passed legislation allowing us to dump even more money into cash value life insurance, and then you've got proposed tax rate increases. So it is an opportunity to help a lot of people and do a lot of marketing around it. And the nice thing is there's a ton of information out there in the news right now that have people concerned about paying higher taxes on their income and retirement. So with that, thank you for taking some time with us today. We've got our number up there, 800-255-5055. Reach out, talk to one of the sales directors, and they can chat with you on how to get you access to this. So thank you.